Hello, everyone. Welcome, and thank you very much for hanging out with us today on the Market Report with Cointelegraph. My name is Joe Hall. I'm going to be your host today, and we are joined again by our resident experts, Marcel Peckman and Sam Borgi. Now, Sam Borgi is a business editor at Cointelegraph, where he brings a decade of experience in economic analysis and financial market writing. Marcel Peckman applies his 17 years of experience trading derivatives, options, and futures to the crypto derivatives markets. Hello, gentlemen. How are we doing today? Sam, why don't we start off with you this week? How are you? And how's the new police notice or drinking notice behind you? It's not yet a Bitcoin mural, but we'll get there.
Yeah, the Bitcoin murals are still in transit, and hopefully they arrive soon. But things are fine. I mean, the Bitcoin price action seems favorable, and obviously my emotional state is tied to Bitcoin most of the time. So seeing Bitcoin at around 23K is not so bad. I think we might have some more room to run, but overall, we're still over a year from the halving, so I'm not getting too excited yet.
Okay, great. I mean, I completely relate to you there. Emotional state and Bitcoin price are far too intertwined. They're like this. And I also actually Googled the halvening date yesterday and started to think where I'm going to be in April 2024. Obsessed is probably the right word. Marcel, how about yourself? Similarly obsessed, starting to Google the halvening for next year?
No, not yet, Joe. I think my main concern right now remains when will regular people, regular folks, realize that they're being stolen still. Like if the government raises the debt limit, and they will, for another $2 trillion, who's going to pay for that? There's going to be interest rates paid for the debt. And who's going to pay for that? For the debt, the interest rates? You. So you're being played. So my biggest concern is how on earth can we make normies open their eyes and understand that they're being stolen?
It's a really good point, and it's what Cointelegraph does on a daily basis. And I think it's something your article, which we're going to touch upon today, also tries to bring to light. You know, how to make it clear to new people to the space that there's a lot of money being printed at the moment. There's a lot of debt being created, and at some point, someone's going to have to pay for it all. Welcome, guys, to all those in the chat. I can see it's going off today. That's good to see. Could be because the market is pumping somewhat. So the market report brings you the information you can't find elsewhere on the web. And so today, Sam, Marcel, and I are going to discuss what's been making the headlines in the crypto space, as well as the wider business and financial markets. Most importantly, though, we're guys at home, our loyal viewers, to try to help you navigate through these sometimes trying and sometimes pumping times. So we're looking forward to chatting with you today and to answering any questions or concerns you may have about the crypto market, or even, you know, what Marcel had for breakfast. We're here to have a chat and to hang out and talk about the markets. I don't know why that came to my head just now. Anyway, here is a breakdown of today's show. So we're going to kick off with the market roundup, which is the weekly highlight reel. Then it's time for a laugh with meme time, followed by market news updates, a quick crypto tip from myself, Marcel's trading insight, and then a Markets Pro subscription giveaway. You can find the link to that in the chat down below. And let's get it all kicked off. But before we get there, I do just want to remind viewers that there's a 20% off discount for Markets Pro in the link to this, in the description to this video, just down below. So click that, sign yourself up to Markets Pro, and try to enjoy some more of this, you know, liquidity and more of this upward price action that we're seeing at the moment. Gents, is there anything we should check in or discuss before we take it away with the huddle?
Yep. Let's get it going.
Let's do it. Take it away, Danilo. Whew. So who else is enjoying that new music? The sort of housey techno vibe to the weekly review. Pretty good, eh? I also noticed that Dennis Porter got 2 tweets in the weekly review this week, one about energy and one about Jamie Dimon's comment from the World Economic Forum, where he basically said that Bitcoin's hard cap of 21 million can't really be trusted. I don't think we need to go into that today, but it's a couple of lines of code and we can all trust it. If you run a node, it's very easy to verify.
It's the same criticism
was there anything
for the past 10 years. They don't even change what they're complaining. It makes no sense. Like after 10 years, you don't give up. You're going to say the same thing, and the hard limit of 21 million coins is still going to be there. You're going to do the same thing for the next 10 years? It doesn't make sense.
So does it mean that his clients, Jamie Dimon's clients, JP Morgan's clients, are therefore they're not buying Bitcoin, which means that it's not priced in? Or is it that he's just using that line to cover up the fact that maybe some of his clients are buying Bitcoin, which could be behind this monumental price pump? Do you think there's a bit of smoke and mirrors at play here?
No. My personal opinion, he doesn't get Bitcoin and he doesn't want to understand it. There's no gain in there for him. He's doing fine just side by side with the Federal Reserve printer. So get free, basically cheap money. What's your call, Sam?
Okay. He who's closest to the money supply doesn't want Bitcoin to succeed, right? So, but we know that JP Morgan is active in the digital asset space anyway. So that's the funny part of it, is that nobody can keep Bitcoin out of their mouths. You see how Bitcoin seems to invite opinions, strong opinions, one way or the other, and this is no different. So, with or without you, Jamie, we'll do just fine.
That sounds like the beginnings of a new Bitcoin-friendly song. We've got a lot of disbelief in the YouTube chat today as well. People calling it a bull trap. I mean, Rene Montenegro there, epic bull trap. I'm still in denial. I think a lot of traders are too. What do we tell these people? What do you think, Marcel? You got a grin on your face there.
I think after 12 months of bear market, like we saw the entire year of 2022, and even worse than that, some of the biggest news came out in November, which was the FTX collapse. So it was, we hadn't got any 2 consecutive months of breathing market. I'm not saying 50% rally, but at least a meaningful recovery. We didn't have 2 months of breath. And now, for the first time ever, we're getting like 3 weeks in a row, maybe a month in a row of continuous going up movement. And everybody's going to scream, that's manipulation, because we are in a bear market until we breach 40,000 or 35,000 or 50,000, whatever. It's normal for people to take some time to reassess their opinion and check, well, maybe if the second largest exchange, FTX, collapsed and cryptocurrencies are still working, still surviving, still valued, still trading, there's still demand, maybe there's future for that. So some of the people who were skeptical are no longer. So it's a good thing that it happened, but people need to understand that the perception from the general public changes after it survives a major crash.
Okay. I mean, if you chat for Cointelegraph is anything to go by right now, then the bull run is almost back on. Lots of disbelief. Some comments there. Someone asking for or saying Bitcoin to 100K. I mean, the name of that account is literally called Bull Run, so I wouldn't expect anything else. Thank you for your comment, Bull Run. And then Reza 2020 stating that commercial banks could be the next blockbuster video. I mean, this is what Tres Antonopoulos said back in 2013 or 2014. He said that Blockbuster became Netflix in the same way that the Postal Service became email, and commercial banks are going to become Bitcoin. Sam, before we jump on to the next segment, what do you reckon? Is this finally the reckoning? Commercial banks are being done away with by Bitcoin?
I don't know about done away. I think they'll always have a place so long as the Federal Reserve is giving them the right and the privilege of printing money. And I think that commercial banks do serve a positive purpose if they're properly functioning. I think that obviously fractional reserve banking is a huge risk. And Bitcoin, I think, empowers a lot of people to build wealth in a parallel financial system using honest money. For me, Bitcoin, the entire premise of Bitcoin is that I don't trust the monetary system. I think there's a really big problem with the monetary system. If you don't believe that's the case, then I guess you have no reason to hold Bitcoin. But we'll see what comes out in the wash in the next 5, 10, 15 years, because at the rate we're going now, this system isn't sustainable. And Marcel touched upon the debt bubble earlier in the US. How is that sustainable? Like, what the hell is that all about? So that's just something to really keep in mind as to why I'm so into Bitcoin. That's my thesis.
Okay. No, I completely understand. I mean, maybe in 5 years' time, when I have a stable internet connection and we're doing this market report, Bitcoin will be trading in the 1 million or what we're saying. So we've got 100K, 1 million per Bitcoin from Dragon7 in the chat. Let's calm down, guys. We've had a 20% rally or so. let's not get carried away until we're up in the 40Ks, as Marcel says. In the meantime, let's roll the meme review and have a little giggle at last week's action.
Bitcoin, crypto. I believe that's Ethereum they're talking, because there's layer 2, there's layer 3, there's the Shanghai update, then there's the next Shanghai upgrade. You never get to the point that you say, yeah, it's working. Let's stay here for a couple of years and try to understand where we are. No, never gets to that point.
And that line over there is running to Vitalik every time there's a problem. That's another one right there. So you never know.
Yeah, Vitalik is the guy in red. Yeah, that's Vitalik, the guy in red.
Yeah.
Run to God, and then there's a
picking
problem.
his nose. But it's not centralized. Remember, it's not centralized. Of course not. Fastest things on earth. Speed of light. Change of sentiment in the crypto market. Oh, I feel attacked. Hit me where it hurts. Memes. True. Sentiment switches, flips on a dime, doesn't it? And right now we are. I mean, look at the chat; it's going off. It's only 23K, guys. Let's keep it measured. In 6 months, 3AC, Luna, Celsius, Voyager, FTX, BlockFi, Genesis have all collapsed. Meanwhile, my Bitcoin in self-custody. This meme is amazing. Good. That is a good, accurate, depiction of it.
My daily regular job.
Do we think? I thought bear market memes were better than bull market memes, but this one's amazing.
This one's so good.
I mean, we're all still here, aren't we, guys? And this is our day job. We're not, slam dunking the baby anytime soon, are we? No resignation letters.
Not below 200K. No.
Good to know. We'll throw a leaving party for you at 200K, Marcel. How about that? On your yacht somewhere.
That would be nice. Yeah.
Anyway, I'm getting way too carried with this bullishness. Sorry. Good to see the chat being so lively this week. We're going to try and give you some informed analysis and some observations about the market. Of course, none of it is financial advice. Don't forget as well that you can subscribe to Markets Pro and get ahead with your trading strategy with a 20% off description. Links down in the chat below. And yeah, let's take a look at the first article of the week, which is that stablecoin data points to a healthy appetite for bulls and a possible Bitcoin rally to 25K. And the good thing about this article is that it was written by none other. Am I right? This is the one that you wrote to Marcel. If I just switch screens, I believe this is written by Marcel Peckman with the lovely graphic of the drifting. Is this your car, or is this your 200K car?
No, that's the Porsche NFT that didn't sell this week. It was a flop.
Oh, is it actually?
Yeah, there was a Porsche official NFT collection. They had 10,000 units. They only sold 2,000, at least on the first day.
Oof. I mean, if poor NFTs at this rate, then maybe the NFT market really is on the way out. Why am I pleased by that? Anyway, in this really, really good article, actually, Marcel explains what's going on with the market, and in particular, he's focusing on stablecoins. And there's one thing here I'd like to highlight before we jump into some questions. But essentially, traders should note that the tech-heavy Nasdaq 100 index also gained 5.1% between January 20th and January 23rd, fueled by investors' hope in China reopening for business after its COVID-19 lockdowns, which seem to be never-ending, and weaker than expected economic data in the US and the Eurozone. So not, Bitcoin is pumping, of course, crypto's pumping, but also the Nasdaq is on the way up. China is doing well, and the US market as well. It's all seeming to be on a bear market rally or the beginnings of a bull run. That's what we're going to get into right now. Marcel, why is crypto pumping, and will it last?
Well, we are on the phase of the market that bad news is good news, meaning people are waiting for layoffs. They're waiting for weaker corporate earnings, weaker economical data, so that the Federal Reserve, the central banks, can sit and say, well, maybe our job is here, work here is done. We don't need to further raise interest rates. The economies are going down by themselves, so we can stop raising interest rates, maybe do 1 or 2 25 basis points additional, but stop over there before the middle of the year, before June or July. So the market is hoping that more bad news emerges, and it's rallying based on that, which is definitely not a good thing, and leaves that sentiment to the investors saying, well, those tech companies just laid off 70,000 people in 3 months. The economy is collapsing. The whole housing price, there's no demand for housing. So how is the market rallying? So it's counterintuitive, but the traders are thinking 6 to 12 months ahead. So they're thinking if the central banks stop raising interest rates, that's going to be good for the companies. That's going to be good for the economy. So they're targeting a longer time frame. So that's why there's such a disconnection.
Interesting. Yeah, I guess it explains the fact that markets are always, forward looking. Okay, what's the economy going to look like in 6 months? Will all these people that have lost their jobs be back in employment? Will they be starting up companies? What's the economy going to look like in June, July of this year? We know that 25K is inevitable at some point, as Bitcoin tends to go up and to the right over a long period of time. But it's 25K on the horizon. That is to say, are we going to get 25K in the next couple of weeks? Sam, what do you think? We're still bullish?
Yeah, I mentioned, I think it was last week or the week before, that I think Bitcoin could probably rally towards 30,000 in the short term. 30K seems to be a magnet, and the price action I've seen now, the gain and the consolidation, lends me to believe that we are in an uptrend. Again, as I mentioned at the outset, I'm not going to get so excited before the next halving. But in terms of the short-term outlook, it does seem positive. I know some people are looking at fractals back to 2019 when Bitcoin, I think, went up 4x, peaking around 14,000. I think it was in the summer of 2019. Some people are getting a little bit excited about that. But just to remind you, in 2019, we saw that rally, and then we dipped again pretty heavily heading into 2020. So, again, temper your expectations, but I think price action has been pretty favorable in the last few weeks. And I'm not going to be a conspiracy theorist and say that it's just all fake until I have more evidence of that. It aligns with the 4-year cycle that we bottomed, in Q4 of 2022. That seems to be the case. So again, anything can happen. And I'm not making any short-term predictions, but everything looks pretty good right now from a price perspective.
Interesting. I know that that period in 2019 all too well, as that's when I started to really take Bitcoin seriously and started to buy a lot. Well, what for me was a lot of Bitcoin, and then chase that run up to 14K. And I hadn't done enough studying, I hadn't done enough learning about Bitcoin. My conviction was not where it is now. And so when I saw the price, I think it went from like 14K to 8K in like a matter of days. And I, of course, was terrified, sold everything, and was like, sod this, I'm going back to gold and, real estate. This is where my money needs to be. And had I been watching the market report, if it existed back then, I would have, sorry, Sam, what are you going to say?
No, where you also subscribe to a lot of the Perma Bear newsletters that tell you to buy gold and been telling you to buy gold for the past 10 to 15 years. But if you joined in 2019, Joe, you missed the range from hell, which was back in 2018. That was a fun time when Bitcoin was 6K for like 6 months. That was a good time. You know, that's sorry, I'm just getting a little bit sentimental now.
No, of course, it's good to look back and reflect because we can take a lot from these experiences. But I mean, for me, 2018 was my blockchain year. I thought that blockchain was the future, and so I have actually got certificates and various things that I've shown off on my LinkedIn profile that say that I'm proficient in blockchain courses. I still to this day have no idea what that means, but you know, I can talk about Merkle trees until the cows come home. So completely, you know, useless learning. But anyway, I'm digressing now. What about 25k for you, Marcel? Are we looking at a 25k before February? You know, that's only a week. You know, it's only a week to get to 3k more. You might be on mute.
Okay, Joe, I think it's a risky call because we have Federal Reserve meeting next week. I also have a bunch of corporate earnings, like 20% to 25% of the S&P is going to report over the next 10 days. So there's, as long as the correlation to traditional markets remain high, we cannot expect a full decoupling, a rally towards 30,000, because it's not going to happen for the traditional markets. So I don't think Bitcoin is going to rally above 25 over the next 2 or 3 weeks. I don't think so.
Mm-hmm. Okay. The chat here is getting quite lively. Bull Run, for example, calling 25k this week. Cardano just shouting BitConnect, and lots of interesting emojis. But Idyllic India, they're saying that he thinks there'll be Bitcoin at 30k by the end of January this year. That's, you know, an extra 7k on the market, which I don't know how much that equates to in terms of, you know, total market cap. It must be in the tens or hundreds of billions added to Bitcoin's total market cap in the next coming weeks. That would imply that an institution is buying, or that, you know, some really big whales are gobbling up the supply, or that, you know, shorts are being wrecked, which is what it seems to be at the moment. I'm not a trader. I'm not a market analyst the way that these guys are. Marcel or Sam, anything to add on the liveliness in the chat? Why is crypto pumping so much, and could it pump as hard as I've just said?
Well, there's the guy Crypto Elf of Rivendell. Halving is priced in. I mean, first of all, we traded at $70,000 a year and a half ago, and now we're trading at $23,000. So if you're saying that the halving is priced in, you're saying that we had a major bubble and it's going to take another 5 years or more until we reach the $70,000. So I don't think that the halving is priced in. The scarcity of Bitcoin is really hard for people who are outside to grasp. And when you first enter the market, you see those coins traded at sub $1, or you see an altcoin that pumped 500% in a month. So you kind of get excited and you say, well, Bitcoin is old technology, Bitcoin is too expensive. So you're going to try altcoins. Then you're going to get rug pulled, and then you move back to Bitcoin. It's a cycle. It's a circle that everybody faces. And I don't think that we're going to have the $30,000 anytime soon. And I don't think that the halving is priced in.
Yeah. If you think the halving is priced in, let me just give you some information. Bitcoin's inflation rate is currently about 1.8%, and it's going to decline by half during the next halving. So even if demand stays the same, Bitcoin is going to rally because supply and demand dynamics work that way. We know it's the inflation rate because we have the data for it, and we know Bitcoin's algorithm and Bitcoin's calculation. So a 1.8% inflation rate is going to be cut in half again. No, it's not priced in as far as I'm concerned.
Okay. So let's move on to a slightly different article, which is all about how the SEC commissioner reminded us about the point of crypto, which I thought was a really interesting headline because I'm not sure she does understand the point of crypto. I'm not pointing fingers there too much, I hope. But essentially, the article from my esteemed colleague Ezra Reguera mentioned that Securities and Exchange Commissioner Hester Peirce highlighted that despite a very bad year, there are less industry to learn. And there's one quote here that I just want to highlight because the commissioner clearly had a thesaurus to hand that day. She said that in 2022, it was a terrible, horrible, no good, very bad year for both the crypto space and the regulators, presumably referring to FTX, Luna, Celsius, Voyager, you name the company that went up in flames, BlockFi. There were issues last year. So yeah, it wasn't a great time to be in the crypto space, but things could be looking, and apparently she's going to all of the point of crypto. Gents, what were your takeaways from this sort of interesting diatribe from the SEC commissioner? Is this sort of pointing away from the Bitslato debacle? Sam, what's your take first?
Well, for me, I tend to listen to what the SEC commissioners have to say, whether I like them or not. I think they have, they're a gauge of where the regulator is headed, and obviously we can't ignore the regulatory aspect. But Hester Peirce is very pro crypto, and she always has been. I think they call her a crypto mom. Is that not the case? So I think basically what she's saying is that don't wait for regulators to come in to stamp out bad practices from the industry. Crypto has a long-term value proposition beyond the short-term pain that we saw in 2022. And in that, I definitely agree with her. I mean, we've seen similar meltdowns in the traditional financial sector around the dot-com era. That era was in many ways very parallel or very similar to digital assets today, in that the internet companies of the 2000s and late 90s, they were, scratching at the surface of a new industry that would eventually change the world. A lot of those companies went under in epic fashion, and a very select few of them actually survived. I think we have similar parallels now with digital assets and Bitcoin. I personally believe that the biggest value proposition remains Bitcoin. I haven't seen a lot of really unique innovation beyond that. I mean, at Cointelegraph, our job is to cover the market as is and to cover every facet of the blockchain industry. There are some positive use cases that I think are pretty interesting. The privacy side. I think the decentralized social media side for me is particularly interesting. We haven't seen, though, a lot of use cases for blockchain outside of money, which is Bitcoin, but that could change. And I still think that the future is very bright once we get past these crooks like Sam Bankman-Fried. I mean, Sam Bankman-Fried was a fraud, regardless of the industry he was dabbling in. Bitcoin digital assets don't promote wire fraud and money laundering and commingling of funds. That's a Sam Bankman-Fried issue, not a Bitcoin issue.
But Sam, I think you're missing a point here. Everybody has a boss, and when the SEC screws up, meaning FTX US was huge there. They had huge sponsorships. They were in the media. They had investors from North America, and they missed. They dropped the ball. They didn't do any protection to traders and investors and etc. So I think the SEC boss, whoever it is, if it's the Minister of Finance, if it's the Treasurer, if it's the President himself, he went in the room and said, "What the hell is going on here? Aren't you guys gonna regulate and fix and do your job?" So when somebody from a higher hierarchy goes down to your office and screams after major flaws are discovered, things finally starts to change, either for good or for bad, doesn't matter, but change are going to happen. Yes, regulation is slow. It doesn't take 3 months because it has to go to the Senate and Congress and votes and etc. But we can be sure that Bitlaslo was not a single case, not connected to Binance and other exchanges. You're dreaming. If you think that's the only case that's going to be persecuted, you're dreaming. Sorry. I think things are going to get uglier for regulation. But I think in the end, that's good for crypto because once you have a regulation in place, everybody who's outside can decide from themselves, okay, understand, this is not a security or this is a security, so we're going to have to pay a fine. But after the regulation, after the fines, you have a regulated market, so it is good. It attracts more investors.
Mm-hmm. Okay, well reasoned there, Marcel. I think I approached this article with. I'll explain. I'm currently halfway through watching I don't know if you guys are watching this, but the Bernie Madoff documentary on Netflix. I mean, it's more edutainment or entertainment than educational or factual, but you can't help but think, oh my gosh, what was the SE doing for so long, letting this massive case snowball seemingly right under their noses? And it just makes me wonder, okay, in crypto we have the same thing happening over again. I'm of course not as familiar with it as our US team, which Sam is part of, but you do wonder. SEC has dropped the ball, as Marcel says, several times in the past 12 months with regards to crypto, and its way of making recompense for this was, throwing the book at this small exchange that no one had heard of, which I can't even pronounce, Bitslato or Tomato, whatever it is. So when you see these comments about how the SEC is now going to make things more clear and is going to try harder and looks back on 2022 and says, oh, it was a tricky year, but next year will be better, I can't help but feel that the SEC is maybe not doing its job as well as it could be. And maybe Marcel's point about the boss has come downstairs and said, you know what, you need to kick up a fuss to make it sure that we're actually doing our jobs here. I can't help but be cynical is where I'm going with this. Sorry. Is there anything else you'd like to add to this article, guys? Move on to another, or should I stop ranting about the SEC?
I think I'm good.
We're good.
Yeah. Okay. In which case, the third point this week, third article, was again referring to the Bitcoin price and how it's staying near 23K as the hodlers here are not selling Bitcoin. So the key point about this article from William Suberg, part of the markets team, is regards to hodlers, or the Bitcoiners with conviction, the Bitcoiners who are hodling their Bitcoin for a store of value or for generational wealth, whatever it may be. They appear to be setting this floor, and they don't see 3K as a good price point to sell their Bitcoin, spend their Bitcoin. As you can see, we've got the big price pump that we experienced, what was it, like 4 days ago now, that brought us into this sort of middling 20K range. And essentially, while technical analysts point out a correction is due, they seem to be unaware that central banks are buying every ounce they can get their hands on. This is in response to gold, which is also doing quite well at the moment, whereas DXY has also been range bound for the past couple of weeks now. We discussed this last week. What I wanted to touch on today was the hodlers. So from Glassnode, and we've got interviews with Glassnode on our YouTube channel, the analytics firm that are responsible for these funny metrics that are hodl waves or long-term hodlers behavior, these sort of metrics, they're able to understand what these hodlers are doing. There's one quote here that I've highlighted: remain broad fast in their resolve to not exit the market, even after more than a year of losses. Of course, the price has been trending down for the past year, and these hodlers are not selling; they are hodling. Marcel, what do you reckon to this here? Do you think it's do you think 23K is a nice price point to part with your Bitcoin, or do you think that these hodlers are going to be waiting for a lot higher prices, or do you think they're just hodling until eternity?
I agree with the Glassnode analysis. I mean, if you saw your position that go from $30,000 or 26, whatever, down 10, and you did not sell, so you're down at a 50% loss or 50% loss. You're not going to sell for a meager 30% gain. It ain't going to happen. It doesn't make any sense unless the guy, of course, I'm a miner, I need to pay my bills, I need to sell at least 30% of my position. But other than that, if you're not really forced to sell and you just experience the 50% drop in the price, you ain't going to sell, dude. You're going to wait at least for 100% or 150% gains from the bottom.
Exactly. And these are, I mean, that's also trading behavior, isn't it? And what about yourself, Sam? Is 23K an appealing price to part with your Bitcoin?
Absolutely not. even though I've been a hodler for a long time, I think we saw the price potential of Bitcoin during the previous bull market. I think with the next halving, you're going to see more price potential. If you're looking to sell eventually, you should at least sell for a hefty profit. And at that point, when you do sell, you're going to have to ask yourself, now that I've parted with my Bitcoin, what's next, right? Where am I going to put that money? So, this constant cycle is something that you have to think about, but I think 23K is not a good level to sell at. And that's somebody who's been in the market for a long time, know the cycles. I wouldn't sell at these levels personally.
Yeah, absolutely. I mean, Reza 2020 is joining you on that. He's still accumulating, as he mentions in the chat there. You bring up an interesting point. If you're selling your Bitcoin, are you selling for dollars, or are you selling because you're spending your Bitcoin on, say, a house or, a car or whatever it may be, something to make your life better, or maybe you're investing in yourself. But I remember this during last year's bull run. If you're looking to sell, what are you doing with that money? If it's going to be something worthwhile, then okay, maybe it's worth thinking about. And sometimes, of course, life does throw stuff at you, and you've got to react, and you've got to spend money on certain things. But if you're just selling for the sake of taking profit, it does seem a bit worthless to do so at the 23K range. It's so low compared to the 60s, 50s Ks that we saw last year. Okie doke. I'm just going to check in with the chat before we move on to the next article, as I know that it's been quite popular this week. So we've got another question from Queen, or a comment from Queen even. She says, we need Bitcoin over 24,588, in my opinion, or when rug pull. I don't think Bitcoin's going to rug pull anytime soon. Not financial advice, of course. I don't even know how you'd commit a Bitcoin rug pull at this stage of the game, because it's got to be, it'd have to pass through my node, and my node is only going to accept the longest chain. So, Queen, why don't you explain how Bitcoin could rug pull? And in the meantime, we'll move over to the final article of this week, which is going to really change things up. It's all about Ethereum and the Ethereum devs. As Marcel joked about in the intro today, there is the Shanghai update on the horizon. This article comes from Tom Blackstone on the US team. He says, Ethereum devs create shadow fork to test conditions for Ether withdrawals. As you may or may not know, Ethereum, or Ether, sorry, is currently locked up as per proof of stake. So if you have 32 Ethereum, you can lock it away, and supposedly it will gain interest or yield, which you can then withdraw at some point. But right now we don't know when you can withdraw it, how you withdraw it, what are the costs withdrawing it, that sort of thing. And this is Ethereum developers look at right now, and you will be able to withdraw them when the Ethereum Shanghai update comes through. Again, we don't know the date of that, and as you might have gathered from me trying to explain Ethereum to you, a lot of the developments are quite flexible. They'll put a date out there, and then it might be pushed back further, or it'll be changed in some way, or there'll be a development because they're constantly trying to work creases and work to bring these products to the market without them breaking. And this is also why proof of stake took 8 years to deliver, because proof of stake was discussed when Ethereum was first actually announced, but only came to us last autumn. Okay, so let's get into the actual nitty gritty, or the nuts and bolts of this. Effectively, the devs have been trying to make these staking withdrawals a reality. And on January 6th, they held a meeting which they agreed to exclude the proposed EVM object format from the Shanghai upgrade. So EOF was intended to make Ethereum easier to upgrade in the future, but because of its complexity, the devs decided to leave it out of Shanghai for fear that it would delay withdrawal implementation. That was a word salad. Marcel, help me out here. What's going on with Ethereum? What's happening with the Shanghai update? And when will I be able to withdraw my teeth? Let's just pretend I've got some stake teeth.
Okay, Joe. So as for withdrawing Ethereum, the 32 that needs to be staked for you to become a validator, or you can delegate to someone using Lido or some of the staking services. But once you stake, it becomes locked. And right now, there's no possibility, there's no estimate on when it's going to be implemented. And the devs were saying, well, during the next phase of the implementation, we're gonna bundle the additional change so people can withdraw the staked Ethereum, but we don't have a time frame for that. The market interpreted that with really some negative remarks, even within the Ethereum community. So what the dev said, okay, so let's split that. Let's do the possibility of Ethereum, staked Ethereum withdrawal first, and then after a couple of months or later in the year, we're going to implement the necessary changes for the sharding, for the parallel processing capabilities that will someday cause Ethereum to become faster and more scalable without requiring layer 2 solutions for them. The thing is, they're always delaying and they never give a definitive deadline for those implementations. And even more worrisome is that the day that the withdrawals are allowed, let's assume it comes live in 2 or 3 months, it's going to be likely a bear pressure for the price, not something positive that investors should be waiting. Well, people have been staking for 2 years, now are going to be finally able to withdraw. Yes, if they want to withdraw, they're going to be selling for cash because they had been locked for 2 years. So when you open those gates, when you open the door, more people will come out than come in, because right now you can join, you can transport your 32 Ethereum and stake it, but you cannot withdraw. So I don't think it's a bull case for Ethereum. I don't think people should create any expectation based on that.
Very good analysis. Sam, anything to add to that?
I think Marcel covered it perfectly, and I'm glad he's covering Ethereum, so I don't have to. So
fantastic. Yeah, we don't give Ethereum enough airtime sometimes, I feel, and it is, of course, the world's second largest cryptocurrency with all sorts of developments going on. If you have any questions specific to the Shanghai upgrade in the that come to mind, then feel free to pop them in the chat, guys. We're here to answer those sort of questions to you. I know that, for example, the article also brought up the malicious nodes and the idea that they're really trying to attack this shadow fork. So a fork which is working sort of alongside the chain, so they can work out any of those kinks or any of those problems in advance. And this is what the developers are working on currently. Do you guys have Ethereum staked, for example? And are you concerned about the lockup period and the fact that right now, whether or not you can get that staked Ethereum back? So let us know in the chat. If not, we'll move on to the final articles, because I think we do have time for this article this week. And it's all about how the Bitcoin logo was projected onto the tallest building in Berlin, possibly even Eastern Europe. I'm not actually sure about the heights of buildings over there. But if we can share my screen one last time, then I'll be able to show you this article written by a fabulous writer, I have to say, who hosts the Market Report this week. Berliners could see the Bitcoin B projected onto the Berliner Fernsturm Tower on January the 21st. If you've ever been to Berlin, you will have seen this building. It's a giant TV tower, looks a bit like this. And a man who chooses not to be named for legal reasons now, he decided with some friends to project the Berlin Tower. And the reason why, he told me in a phone call, was that we just want to call attention on Bitcoin. We're fans of guerrilla actions like this, and we'll keep on track. You know, guerrilla actions are the idea that, you know, you take sort of power into your own hands, or take responsibility into your own hands, and do these sort of small exercises that really bring attention to something. And projecting the Bitcoin B onto the Berlin's tallest tower is definitely a way of doing so. This has actually happened across lots of landmarks around the UK. In my home country, the UK, for example, printing money is stealing from the poor was printed onto the Bank of England sometime last year. And some people thought it was Banksy, the famous artist. I don't think it was, but it'd be very cool if Banksy was a Bitcoiner. Anyway, yeah, this isn't the first time that the man who's called Thilo, that's all the whole name that he wanted to share with us, has also projected the Bitcoin B onto the Berlin Wall, another iconic landmark in Berlin, which used to be the segregation between East Germany and West Germany. What do you think, Marcel? Is Thilo here getting himself into trouble a bit, or is this the sort of pirate-like act that we celebrate in the Bitcoin community. I mean, it looks quite cool, right?
Yeah, I think we should celebrate as long as there's no destruction. There's no of public stuff like putting fire on central banks and etc. I don't think people should do that. Yes, you can throw lights, you can cut the power of the building, maybe create some trouble, but do not destroy anything. So just showing some light on Bitcoin, I think the community should embrace the decision, the act.
Nice. Yeah. No, don't set a fire to central banks. I feel like that should be a tweet or something. And also, secondary to this story, so Thilo realized the importance of sort of obfuscating his identity, and so has created a Twitter account called, I think it's called Bitman, a play on Batman, because of course Batman used to project his logo into the night sky when he was protecting the city of Gotham, was it? I don't know where I'm going with this knowledge. Anyway, Sam, do you like this sort of thing, or do you think it's a bit of a marketing gimmick? Is it, not really helping the Bitcoin movement? What do you think?
I'm not sure it's helping. I mean, there's many ways we can give credence to Bitcoin or promote Bitcoin. I'm not against this, as Marcel mentioned, as long as it's not resulting in any kind of violence or any kind of destruction of property. I'm okay with it. Okay.
Yeah, I mean, the Reddit group for Berlin, the subreddit for Berlin, there's a lot of hate in that group. A lot of people were calling it light pollution. Some were saying, why do we support this coin that's based off turbo capitalism without limits and morals? Gosh, wait till they find out about the fiat system. But yeah, clearly Berlin is, Berlin in European terms is more of like a left-leaning sort of socialist-y city. It's definitely more liberal in terms of political thinking, but economically speaking, it's definitely more social. They had huge handouts during the pandemic. This summer, for example, Berlin had free transport across the whole city. Just everyone could travel for free, which is kind of amazing, but obviously more of a left-wing sort of economic idea. So yeah, they don't like the turbo capitalism that Bitcoin represents. Yeah, go ahead, Marcel.
Joe, there's a question from the audience. I think it's directed to you. Stock origin. Do you really think that Bitcoin, who is slow and expensive to transact, will be used as a daily money on our lives and will reach the all-time high in the next years? I think it's a good question for you.
It's a great question. Bitcoin isn't slow or expensive to transact with, firstly. It depends who you are and what you're used to, of course. But 10 minutes to wait for a transaction to be confirmed, on average, is pretty good. And if you're not happy with 10 minutes, then use the Lightning Network. It's pretty much instant, and it's faster than fiat payment rails, and it's way cheaper as well. So try the Lightning Network. If you don't know how to use the Lightning Network, DM me on Twitter. I'll put my name in the chat below, and I'll show you how to download a Lightning wallet. And I'll send you some sats so you can play with yourself. Sats are, of course, short for Satoshis. What was the second point? And will reach all-time high in the next years. That's probably better, but I would say yes, of course. Absolutely. I would give it maybe 3 years till we hit another all-time high. I think that's fair to say. Anything to add, guys? No? Or did my message get lost by the internet connection there? I'm really sorry about that.
Well, we can move on.
Oh, when you pay by credit card,
mute, maybe. Is that what's happening?
Yeah.
There we go.
Sorry. When you pay by credit card, I just want to remind the viewers that the transaction can be canceled, revoked after 30, 60 days. So it's not the final transaction. When you're transacting in Bitcoin, wait for 1 or 2 blocks, it's a final transaction. So it's 10, 20 minutes stops.
Fantastic. There you go. I hope that answered your question, Stark Origin. Thank you very much as well for popping it in the chat. I really hope you don't start shilling Ripple or XRP to us, because this is usually how these questions start. I've been here before. But yeah, as I say, the offer's still open. If you want to ping me on Twitter, I'll happily send you some sats over the Lightning Network. And let's move on with the show. So next up is a little segment to talk you through a crypto tip. So this week we're going to be talking about cryptocurrency copy trading. This is a nice and straightforward one, as crypto copy trading is an automated strategy that lets one copy inexperienced traders' trading methods. It enables you to buy and sell crypto assets to earn profits without putting in a lot of time researching or skilling up or gaining proficiency in crypto trading. Now, basically, crypto copy trading is all about identifying skilled traders, so finding those traders that are regularly registering a profit and re-executing their moves. Literally copy paste their moves. A trader doesn't have to spend a lot of time studying market trends or learning complex trading methods or putting all those hours into, getting that those notches to your belt. Rather, the software just mimics what the expert trader is doing. For instance, if the copy trading software is following, invest $100 to buy coin A, for example, Bitcoin, the software will also spend $100 on Bitcoin too. The tool not only helps amateur traders to use the expertise of other traders, but it also helps them learn the skill of making smart investment decisions. Because, of course, while you're copying these traders, you're also mimicking and learning from that process, which will help you in the long term on your trading journey if you're so inclined. So don't forget to send us your comments and questions for your chance to win a 1-month subscription to Cointelegraph Markets Pro. That's, of course, worth $100. And if you fail to win that, then there's still a 20% off Markets Pro voucher in the link in the description. Cool. I think we're now moving on to Marcel and his trading tips for this week. And Marcel, what have you got lined up for us?
Okay, Joe. So let me tell the viewers a little secret. Year to date, in 2023, Bitcoin gained 38.5%. So how much do you think, on average, the remaining top 20 coins performed? I'll tell you the answer. They gained 37.5%, so 1% less than Bitcoin. And notice that this was greatly helped by Solana, which gained 144% in the period. If it hadn't been for Solana, the altcoins would have underperformed Bitcoin by 5%, so gaining 32% in the year. So first of all, does that not mean that an eventual 40% rally from here on Bitcoin would also be detrimental to altcoins, that altcoins will underperform? It doesn't mean that. But one thing you should note is that Bitcoin's dominance increased over the past 12 months. So Bitcoin's dominance is Bitcoin's market share. Danilo, I want to share my screen here, please. So excluding stablecoins, Bitcoin's market share increased from 43% late 2021 to the current 51%. But more importantly, that number was 64% until March 2021. So you want to know what happened that caused Bitcoin's dominance to drop from 64% to 43%? I'll tell you the answer. It's shocking. Thank you for sharing, Danilo. Bitcoin had rallied from $11,000 to $61,000 in 6 months. So the dominance stayed at 64 or higher. But once Bitcoin hit the resistance at 61.5 and came down to $50,000, that's when those whales and investors decided to seek additional gains by pumping altcoins. So it was not during the bull run that altcoins outperformed. That is not true. People think that if a rally is coming, if Bitcoin is going from $23,000 to $30,000 or $40,000, then the altcoins are going to rally more. And I just show you that in the past, that was not the case. But I don't think people should obsess with a single metric. For instance, if retail traders, there's a new demand for retail traders buying crypto, no matter the reason, we already know how those newcomers behave. They're going to seek higher gains or lower face value investments. So shifting the demand to low volume coins, the altcoins, and causing a huge bump. The point in case remains, altcoins are losing market share. And until there's some FOMO from retail, the fear of missing out, so newcomers in space, only a handful of altcoins will surpass Bitcoin. So yes, Aptos, Lido, Decentraland, Optimism, and Curve, they all gained 100% or more in the year. But they were not the top 50. They were ranked 60, 70, 80, 90. They were not top 50 coins. And if you're gonna have if you're gonna have some exposure in altcoins, at least you have to know what you're doing. Don't try to chase gains. Don't buy the coin after it traded 150%. Remember, the majority of the altcoins lost versus Bitcoin performance in 2023 in the year. And remember, from last year, we had Luna, FTT, Helium, Wonderland, Serum, Harmony, Clayton, Moonbeam, AMP, Flow, Oasis. A bunch of them were top 100 coins, and they lost 70% or more against Bitcoin. So I'm naming over 10 coins that were top 100 coins last year, and that lost over 70% against Bitcoin. So the thing is, we get easily impressed when you hear that a coin rallied 20%, but we easily forget when a coin drops 90% or 100%, as it has happened. So guys, be very careful during this bull run.
Really valid analysis there. Thank you, Marcel. Love that you're living up to your name of no shitcoins there as well. That's really good. Healthy stuff. Interesting is that you say that they are dropping in value against Bitcoin, and Bitcoin also dropped in value. So measured against the dollar, you are really getting wrecked on some of these coins. So be careful out there, traders. Speaking of which, why don't we talk about another top tip for the traders out there? We've got something special for you guys from the Markets Pro team. So yeah, let's roll up the transition. Very good. So this week we're talking about Rocket Pool, which featured in a newsquake for Markets Pro. Now, news is what moves the crypto market, and the newsquake service by Cointelegraph Markets Pro helps traders stay on top of important developments. Newsquakes are automated alerts that instantly notify users when market-moving events happen. Thanks to them, Markets Pro subscribers, like yourself, I hope, often beat the crowd to the most important news of the day. That's what we saw this week with Rocket Pool. So Rocket Pool, as you may see this week, had a gain of 48.5%. That's a pretty solid gain off the back of a newsquake that was registered by the Markets Pro team this week. So yeah, don't miss out on those and take advantage of some of these newsquakes as they are delivered straight to your notification center with Markets Pro. A second Cointelegraph market is the Vortex score. It's a really useful feature. It's an algorithmic metric. And basically, a coin's Vortex score is a comparison between its current market and social conditions of those in the past. So a high score means that, judging from historical data, the asset's current outlook is bullish for the next 12 to 72 hours. These are very short trading periods. Conversely, a score of 80 and above is considered bullish, and a score of below is bearish. So here we have Optimism, which scored a 75 score on Cointelegraph's Markets Pro and rallied a whopping 46% off the back of this score popping up on your nation dashboard. That's a pretty strong gain. It flashed up on Wednesday, January the 18th, to inform Markets Pro subscribers that the token's patterns mirrored historically bullish conditions. Remember, scores under the threshold of 80 are still worth noting. So 75 is still pretty good. The asset's price soon climbed from $1.65 to a peak of $2.41, an increase of 46%. So yeah, these are the sorts of tips, tricks, and tools that you can take advantage of with the Markets Pro subscription product. So don't forget to take advantage of 20% off in the description down below. And yeah, click like, click subscribe, and share these videos with your friends or trader buddies. And I don't know what the feminine word for buddy is, and friends, girls and boys, to ensure that they're all getting informed about their trading and improving their trading journey. Made a real hash of that one there, gents. Sorry about that. We're moving on to sum up today's show, which ended up being quite a long one, but I guess it's probably because of this bullish sentiment we saw in the chat. Very nice of you all to hang out in the chat with us today. I saw Wrong again, long-standing viewer, dropped in and made gains off of this one. I hope you made gains thanks to the Cointelegraph Markets Pro tools. It really is a useful service for those traders out there. Sam, any closing comments for this week? Any advice, any ideas, anything you'd like to share with the viewers?
We're still in the early stages of the next 4-year cycle, I think. So have patience and have a well-defined investment horizon. And I think you'll be fine in the long run if you invest wisely in the future. Not financial advice. I think Bitcoin is probably going to be the center of most successful investment portfolios for the next cycle.
Very good, excellent. Almost echoing Marcel's point there as well. Have some exposure to Bitcoin. Not financial advice, but these are the sort of things that these guys are doing, and they've been in the markets for a long time, and probably longer than you watching at home. Marcel, any closing comments?
Well, I would say, Joe, if you're going to invest in cryptocurrencies, it doesn't matter if it's Cardano, XRP, Ethereum, Bitcoin, whatever you're going to do. Don't panic if you see a 30 to 40% price drop. There's too much volatility, so hang on tight. Wait 2 or 3 years for investment to mature.
Excellent. Good point as well. Yeah. I mean, Michael Saylor says that as well, doesn't he? He says, if you're holding an asset and you're looking to sell within less than 4 years, then you're a trader. You haven't really got conviction for that product. And it's the same for a house. It's the same for a lump of gold. And it's the same for Bitcoin. See yourself through one full cycle, and then things start to really make sense. I mean, they start to make sense for me. So I really hope they make sense for you guys around the world. One last thing to do this week, and it's just to announce the winner, who I've just been informed. 2020 Twitter handle in the chat. If you don't have Twitter, feel free to ping us an email, and we'll get you that Markets Pro subscription sorted for you. Well done. And thank you very much for your comments this week. Thank you everyone else for dropping in and hanging out with us. It's been a really good week for the markets. I hope it's another good week, so that next Tuesday my internet is a lot better because I'll be able to afford an Ethernet cable, for example. You're very welcome, Reza 2020. Thank you very much as well to Sam and Marcel for hanging out and for showing off that amazing Bitcoin merch. When Bitcoin's 40K, I'm going to buy Sam a nice Bitcoin sort of mural to have behind himself. How about that?
Sounds good.
You can hold me to it as well. All right. Thank you very much, everyone, for tuning in, and we'll see you next Tuesday at the same time.